Yeah, good morning, everyone. So we are seeing some drastic corrections in the US market. Mainly reason is decline in Nasdaq and IT related stocks. Google came up with the numbers and the share is yesterday it was down by around 5%. Whereas Tesla also came up with the numbers and numbers were below expectations and the share was down around 12%. Taking clue from these heavyweight stock, a lot of stock related to that, even Nvidia and all were down yesterday in the US market. So giving a substantial corrections over there. And after a long run, this was a major correction which has come. Even if we see Asian market in line with US market, they are also correcting. Most of the markets are down by around 1.5%. And apart from that, even the commodity also, if we see aluminum downward around 0.5% from equity market close yesterday. And also iron ore and the steels are today morning down by around 1.5% each in China. Oil is flat. So only thing which is what we see the positive sign is that dollar index is not coming off. In fact, it has dollar index is not appreciating. In fact, it has come down by around 25 basis point from the same time yesterday. So though the scenario in the international market seems quite weak, and we will get some reflection of that in the opening. But quite possible the US futures are positive. So there was an excess in US market. So we may find a support at a lower level in the Indian market as well. Now I'll request technical team to take up from here.
Yes, sir. Good morning, all of you. See, after global cues, Nifty expected the gap down open, and if Nifty break the important level in open in opening 24 to 40, then we expect further sell up towards 24 140 and 24,000 at downside. The first immediate support, first half we expect around 24 to 40 in Nifty. And next immediate resistance is 24,500. So we expect gap down open in first session. Bank Nifty also showing us some weakness last two trading session, and last we saw that the 50 DMA next immediate support place around 51,000 and below that 50,870. And if Bank Nifty break 50,870, then this pressure to be increased towards 50,370 and 50,000 at downside. Upside 51,900 is the next immediate resistance for Bank Nifty. So Bank Nifty also looks weak today's session. Fin Nifty also trading below the important zone, and that important zone comes around 23 to 40, and yesterday is close below that level. So downside next support place around 23,000 and 22,800 next support for Finity. Upside 23,400 is a first immediate resistance for Finity. To all three index we expect gap down, and first half is managed to trade below the support zone. Then second half we expect further sell off. Otherwise, if Nifty sustain 24 to 40 level, And first 1 and 2 hour, then we expect some pullback rally. Otherwise, is trading below this range, then we expect further sell off in towards expiry. Stock specific, Atul Industry looks positive. HDFC Life also given a good rally yesterday. We expect this rally to be continued. NTPC also looks positive at current level. Upside 400 and then 410 next immediate target for NTPC. First support place around 384 and then 380 is a major support for NTPC. Those have they can hold it. Negative side, Hindalco looks weak at current level. We expect some pressure to be continue in Hindalco also. Second, Grasim also trading in overbought zone and momentum indicators showing some profit booking in upper range. To expect some profit booking in Grasim. SCL Tech also expect some pressure in upper range right now trading in overbought zone. That's it for technical derivative I can get.
Thank you. Good morning, Aaron. So on the derivatives front, as we are seeing that the from last 3 to 4 days of trading session, we are seeing that the pressure is being witnessed from the upper end, and Nifty is continuously facing resistance near 24,500 level, where we are seeing that the call data positions are not getting shifted. Although at that point of strike, the call data positions are continuously getting added out. Between 24,400 to 24,700 strike, we are seeing that in yesterday's session call at a position have got added up massively against it, that the put at a positions on the downside are getting added near 24,000 to 24,100 level. So we are seeing that the range which was from 24,500 to 24,800 has gone shifted on the downside to a 24,000 to 24,500 level. As we are seeing that from past many days, the Nifty was facing continuously the supply zone, and today's session, as per the gift Nifty, we might witness some healthy sell off in the opening session, which will take Nifty towards the 24,100 level. If in today's trading session or in next 1 to 2 days of trading session, if Nifty goes below 24,000 striker and the major liquidation of the put writer takes place at that striker, then the next immediate support for the Nifty will be directly toward 23,700 to 23,600 level, as per the August OI positions which we are seeing right now. While the PCR yesterday closed at 0.87 level, we are expecting PCR to drop on the downside towards 0.62 to 0.58 level in next 1 to 2 day of trading session, where we might witness a support is likely to be again taken near 0.5 to 0.62 level. So currently in today's day of trading session, once again, if Nifty goes about 24,300 level on the stability front, then only new long need to be created, or else we might witness some sort of supply in the first half of trading session. So that's it from the derivative front. Thank you.
Good morning. On the result front, the Epigrel Limited posted the results, and results were improved. Revenue grew by 43% on a YY basis. During the quarter, it has delivered 29% volume growth. Company's derivative and specialty chemical segment has contributed 53% of the overall revenue, which was at 46 to 48% range in the last 2 to 3 quarters, and it has seen the 14% sequential volume growth also. Operating margins stood at 27%. The management in the con call yesterday has provided the guidance of 20% volume growth and operating margins in the range of 24 to 25%. The other highlights in the con call were that the management will continue to focus on the derivatives and specialty chemical segment, and it aims to achieve the revenue share of 70% from the segment and the rest from the chloralkali by FY27. It is expected to commercialize chlorotoluene production from Q2 end, and it is expected to ramp up fully in the FY26. Also, the management is expected to announce further capex plans for its growth in during FY27 and 28, and for the same, it will continue to focus on the derivatives and specialty segment. The stock is currently trading at 17 times to FY26 EPS. We had recommended this stock at 1300 levels as a stock pick for the month of May with around 30% upside, and currently it is trading at around 1650 levels. And we remain positive on the company over the long term as it has continued its focus on the derivatives and specialty chemicals products. As discussed in the call, the management has followed the strategy of selecting the products having more than 25% of operating margins for this segment. So we are positive over the long term. Tattvachintan Pharmachem Limited posted the results. Results were broadly in line with expectations when it comes to top line and operating margin. However, on the bottom line, the PAT has reported rupees 5 crore and versus the expectation of 11 crore. Overall, the performance was largely impacted by the performance in SDAs due to pricing pressure on account of subdued demand, as well as there was increase in freight cost as there was unavailability of the containers. The management has revised down its guidance in terms of revenue growth to 20 to 30% due to lower SDA pricing, and also other portfolio is also not able to perform well due to limited restocking from its customers. The stock is trading at a PE of 37 times to FY25 EPS, and we are negative on the stock in the near term. Yesterday, SRF has also had a con call, and the company has highlighted that overall chemical segment has degrown by 11% on a YY basis. So the industry, the segment has seen the pricing pressure in the specialty chemical segment due to global destocking and competition from the Chinese players. The packaging film segment has delivered improved performance, mainly led by BOPP. During the quarter, revenue growth was largely supported by the new project commissioning to an extent, and it expects the ramp up in the current year. The company has given the positive commentary on the new AI molecules, and while global slowdown and destocking has impacted the overall top line growth, the management is still positive on the domestic growth, where it has seen 60 to 70% volume growth. However, US market has seen the weakness, where it has seen the lower volumes against the previous years. The management has sustained the guidance for the chemical segment, where it expects around 20% revenue growth with operating margins in the range of 24 to 28%. Also, overall capex guidance has sustained at rupees 18 to 19 billion, which will be mainly towards the fluoropolymers and the select molecules in the specialty chemicals. The stock is currently trading at 31 times to FY26 EPS, and our outlook is near-term neutral, while we are structurally positive over the long term. Thank you.
Good morning. Yesterday, KPIT came out with numbers during the market hours. Results were in line with expectations, wherein the revenues grew 4.7% on a quarter-on-quarter basis. However, EBITDA margins grew 40 bips on a Q-on-Q basis, and it were higher than the analyst expectations at 21.1%, despite a ESOP effect of 2 months of 0.7%. PAT also was higher due to a one-time income of 33 crores coming in from a JV. So adjusting this amount, adjusted PAT came in at 171.5 crores, which was in line with expectations. So company is seeing good traction happening in Asian countries, and it's aggressively strengthening its hold in Chinese markets. While company sees pressure on demand from in the mobility industry, however, it is providing differentiated offerings to its clients, and thus expects good growth momentum in the medium term. So company has maintained its yearly guidance of 18 to 22% organic growth for FY25. And on the EBITDA margins, it has maintained its guidance of to be 20.5% plus for the fiscal year 25. For the next quarter, that is Q2 quarter, margins would be impacted by 2.8% due to wage hikes and ESOPs. So outlook for the company remains positive, and one can accumulate the stock on declines. Thank you.
Hello everyone, good morning. L&T result is in line with expectations. Revenue declined by 17% QOQ but grew by 15% YOY. Revenue from IT, financial services grew by 18% YOY and revenue from infra grew by 21% YOY. EBITDA declined by 35% QOQ and 11% YOY. EBITDA margin came at 10.2% versus expectation of 10.4%, and PAT is in line with expectations. So the outlook for L&T is positive because order inflows increased by 8% YOY. It's above expectation, and order book increased by 19% YOY. Thank you.
Yeah, apart from this, Jindal Steel and Power declared its results. The results were marginally ahead of expectation, mainly on account of higher volume, wherein they sold around 2.1 million ton of steel versus expectation of 2 million ton, and last quarter also 2.01 million ton. EBITDA per ton came more or less in line with the expectation of 13,585 versus last quarter 12,162. Management has in the con call indicated that the next quarter the decline in the coking coal will be of around $35, and also the iron ore will be lower by around 500 to 1,000 rupees, whereas the price is also correcting. No doubt from the spot market, if we see, the prices has corrected by almost around 1,500 to 2,000 rupees, but the impact for the company will be up till now, up to July. Whatever the price are there is around 500 rupees, mainly on account of their product mix, wherein a lot of good quality, value-added product the company is manufacturing. Another thing which company has indicated that a lot of expansion is going on in the Jindal Steel and Power, which has got delayed. They were expected to start blast furnace in Q2, which will be starting in now Q4. And also a lot of slurry pipeline also was expected to start in Q2, will be now increasing in Q4. So there is some downward revision in the expectations of FY25 earning because of the delay in the project starting. But all these projects are coming and will be having a positive impact on FY26 earnings. So there could be some softness in today's price because of the steel prices coming off, and the company has delayed the starting of their expansion project, which is bigger projects, very large projects. So there could be some softness in this steel in the prices of the company, but long-term outlook continue to remain positive. So any good corrections in the Jindal Steel and Power stock can be used to accumulate this stock. Then Axis Bank also came up with the numbers, and numbers were below expectations, mainly on account of credit cost and slippages. So slippages has increased in this quarter to 4,800 crores against last quarter of 3,500 crores. And also the growth was also not so very great in this quarter. If you see, the advances has grown by around 14%, and management expect similar type of growth to continue in the coming period as well. So outlook for the near term for the Axis Bank is there could be some corrections in the prices of the Axis Bank. Also, DCB Bank has reported numbers which were below expectations, mainly on account of NIM. NIM has come down substantially to 3.39% from 3.65%. And management has not given any indication that how it will bounce back in the near term. So there again, the outlook is negative for DCB Bank. Then apart from that, HFCL has come up with the number. The numbers were okay as compared to the last quarter and year. Last year, the revenue grew by 16% and the EBITDA has increased by around 19%. The guidance which has been given by the HFCL to double the revenue in next uh, 3 year and also expand the margin to 17 to 18%. That seems uh, in this quarter it's not catching up that fast. So quite possible that the stock may see some corrections on that account. Otherwise, the result is okay. Then Oracle Finance has come up with very good numbers. Revenue grew by around 19% year on year and 6% quarter on quarter. And EBITDA also came up, improved to 50.8% versus last quarter 44.7%. So the outlook here also is positive. So that's all from us. And I'll request technical team to commodity team to take up from here.
Yes, sir. Thank you very much. Good morning, everyone. So we have witnessed gap down opening in gold and silver. Gold further can test 67,500 to 67,400 on downside. So all in all, one can sell around 68 150 and maintain a stop loss of 68 400. However, from 60 from 67 300, one can initiate a buy for a pullback with a stop loss of 67,000. Silver also we are expecting prices to correct till 80,500 on downside.